Hi, this is Matt and Tony with MN Wealth Advisors. Just wanted to touch base and say welcome to the new office. We're looking forward to seeing everyone. Things are going well. Just wanted to touch base as far as the markets, the economy. Right now there's been a lot of concern about regional banks and everything that's going on. Currently there's a lot less turmoil in the banking sector than there was back in '08. So that's the number one thing to look at. Secondly, the Fed may be getting near the end of their rate hikes. But when you deal with the pundits on TV, the internet, Twitter, companies, or I should say institutional investors shorting stocks, they're pushing the banking stocks down to unreasonable levels and causing some of this problem. So for right now, when you look at the FDIC coverage, I don't think most people should be concerned. Number one, you get $250,000 per person on the bank account. And then if you have a trust, if you have 2 trustees and 3 beneficiaries, you actually get coverage up to every person. So if you have a husband and wife and 3 kids, that's $1,250,000. So I don't think that should be a concern for the vast majority of our clients when it comes to this. Right now, it's just more panic than it is reality. Matt, you kind of want to touch base on a couple items?
Yeah, I do think we're going to see some more volatility in the financial sector. I actually just got back from New York last week. Attended a conference with JP Morgan, some of their portfolio managers and analysts. So I'm going to be doing a deeper dive from that perspective, just thinking at the economy as a whole, our expectations for the rest of 2023. But you think about the conditions we have this year versus last year. They're two very different years. Last year stocks and bonds both really struggled. This year we actually have a lot of optimism for the fixed income and the bond portfolios. Because there's an expectation that if things start to slow down economically, the Fed might actually have to cut rates maybe later this year, going into 2024, and that's actually a very good boost for the fixed income part of the portfolio. So definitely some reasons for optimism there, but a lot to digest and unpack. So like I mentioned, we'll be doing a deeper dive on that. When you look at some of those fixed income rates, so we're seeing 5%, maybe a little north of 5% when you look at treasuries or some CDs that are currently out there. So we do have some clients now that are asking us to manage some cash for them versus having it at their bank, just because we can get a pretty good yield on that. So that's of interest to anybody. Certainly feel free to let us know. But yeah, we're excited to be in the new office. We are planning on having an open house in August of this year. So just be on the lookout for an invitation and to save the date for that. But more to come very soon on both fronts. Thank you.